All right, good morning, everybody. Excuse me. How's everybody doing this morning? So we're going to take a look at Bitcoin and a few other things this morning. What's up, Wes, Ed, Giles, Danny, everybody? Good morning, good morning. So first and foremost, we're going to take a look at Bitcoin. This is the 3-day chart. You can see that we clearly have, went down almost to the oversold level on many time frames. Let's go over here to the weekly real fast. So far, what we've done is today is Thursday, so there's still a few days left on this, but we have essentially just put in a test of this bearish candle here, just a midpoint test so far. If you look on smaller time frame charts, if you guys could just let me know you can hear me in the chat, that would be fantastic, as I was messing around with some settings. It looks like everything's good on my end. All right, perfect. Thanks. All right, here we go. So Bitcoin, basically, if you look at the smaller time frames and you put in just a simple descending trend line like that, you can see that you did break out above it. You did came back in, retested that, and so far you are trading sideways. Now this is absolutely fantastic. It's a great thing when you put in a low. See this low down here? We did not test that low, but then we come back up and take out the trend line. It is not necessarily, it is kind of parabolic to the downside, and those trend lines generally are the ones that get broke first. However, it still says something good that yes, we have found a low and we are trading up off the low. If some people are going to be calling this the start of head and shoulders formation, but I don't know, you know what I mean? Let's just see if we can get some higher prices out of this thing. It's still trading very, very close to the lows, and I don't like that. If you put in your fib from high to low, I would say you're probably just testing around the 386 or the 382, and you're not. You haven't even gone up there yet. So this isn't good. Once we start getting up into these higher prices, you will see intensified selling. However, climbing higher slowly is what we want to see. We don't want to see this thing just shoot straight up back to 50K, because that would be kind of indicative of bearishness, more or less. So if you have a nice, slow, methodical, sideways to up motion, then that could be something like what we seen back here in March when we had that liquidation event. You can see here we traded off massively, basically the same way. Now this was not in an uptrend. We were not in the bull market. We were still basically, I guess you could say, in the bear market, but you traded off 60% there. And then you did bounce up a little bit faster than you would have wanted to see it bounce up, but then slowly just started to make its way up until it took out the highs. Now, I have said on previous live streams that basically anything under 59K is just another lower high. You do have to get a daily closure above this swing high in order to say that it has repaired this decline. All right, anything lower than that is still just a lower high on the daily time frame. If you can start putting in higher highs and higher lows on the smaller time frames, which that would be fantastic, right? That would be fantastic. Let these resistance areas get tested, let price pull back, let bulls step back in, because there is still a lot of negative investor sentiment out there because of this massive move and simply everybody that got destroyed. All right, so it may take some time for Bitcoin to put in this repair. Anything under these two green dojis, you're still in bear market territory. You're in bear market territory. That doesn't mean I'm calling the bear market. That just simply means that the definition of a bear market is when an asset puts in a high and then trades off 20% of that high and remains under 20% for a couple months. And that's how you clarify a bear market or not. So anything lower than 51K is still considered bear market territory. Not the bear market is here, just you're in bear market territory. So we'll see what happens with Bitcoin. I did pick up a little bit more on this stab lower the other day, but it wasn't a lot. I'm just basically seeing what happens. I was looking at a few other things, Luna as well. Yesterday, I was looking for a possible short. I had my trend line completely off when I posted it on Twitter. I wasn't even paying attention to it. I just simply hit save and posted it, but it was like up here or something. It was way off. This is where I want it. I tacked my trend lines to swing lows and swing highs, and you can see that we did get a test of it, but now we've broken back beneath it. We are testing it again. This resistance level right here is from a 4-hour, I believe, or the daily, one of the two. No, it's not from either one. TradingView likes to move my lines around, so I'm not exactly quite sure what I got that from. This white, okay, it's an hourly. So you did trade above it, and then you traded back off. Now you have held support down here, which is good if you're bullish on Luna. The only reason I'm talking about Luna instead of other things is because I was absolutely looking to take a position on it yesterday, but it did not do what I wanted it to do. I wanted it to test that trend line and then fail, but then it broke back above, but that was because my trend line was in the wrong spot. So I was watching this section of price here, all right? So it did come up, test resistance on an hourly. You can see it, flawless test, beautiful, threw in a couple wicks above it, but look at your closes. Closes are so important. New traders need to understand this. Your closes are your support and your resistance areas. Look at this. There's your last bullish close. You traded up into it, closed back beneath of it. Boom, went right back down and tested support. Support has held. You are trading back up into resistance. This is a range. All right, you will get chopped up in this if you try to trade it. If you were looking for a short, now, in my opinion, would be the time to take it. Just simply putting your stop loss above this swing high. This is not financial advice. If this trade gets messed up and you lose money, it is 100% on you. However, this could be a good spot to put a stop loss if this trend line is going to hold. This is the legitimate, the right trend line. This 1 hour bearish breakdown is good for looking for lower tests. What I would do in this situation probably is just see if you get a wick above first before I try to take that entry, because they may be pushing it up to look for those stops. However, you may not get that either. It's just a flip of the coin. Ching! It's a flip of the coin. You never know. Is price going to go up and run stops before it heads lower? Is price just going to head lower from a simple resistance test? Or is price just going to keep going higher? This is range bound, so I might take an entry on it and I might not. And then the Doge trade, guys, I'm still short on the Doge trade. I am waiting until if we get a closure above 36 cents, a little bit more than 36.5 cents, which is this hourly candle here. When we traded up into it, I told everybody in the Discord community that if we get an hourly closure above that level, I will be exiting my Doge short and looking for other opportunities in this market, because simply sideways trading is not good, right? If you're not making money, then you're losing money. It's just the way I look at it. Essentially, if this asset's just going to keep chopping around inside of the range, then I will look to possibly exit it and deploy that capital elsewhere into an asset that is making trending moves. The reason I haven't yet is because it's just been chopping around for a couple days, right? This thing just came off of a massive push lower, so sideways price action is par for the course, especially after a big massive move. You can see here, though, clearly on the daily, you have not tested daily resistance yet. Let's get rid of this fib, as that had I was watching something else. Here you go. There is your resistance right there. And then you came down and you put in a new daily support. So you are trading inside of this range. You came up and tested something. I don't know what, probably something on a smaller time frame. Yeah, that hourly. That's that hourly. So that hourly candle where this line came from is where it found resistance and traded lower. And that's a flawless test there of that hourly as well. So that's an hour order block or Heath level or resistance, whatever you want to call it. This level here, you can see you traded up into it, rejected, got to push lower. This validates this area as resistance. So when price trades back up into it, you will likely get a failure. Now, if you get this kind of price action where you put in a resistance like this from an order block or from a Heath level, whatever, and it trades away, that invalidates level. If you trade back above it, that level is still validated. But you may be looking for a test from the upper side. You see what I'm saying? So like if you trade down and then you get a big bullish push out of there, that is also a good area to look for possible entries on long positions if you come back in and trade to it and reject from it. All right, because it is a very important price level. It's not because I'm saying it's a important price level. It's because price is saying it's an important price level. You can clearly see how flawless you tested this test, and then there's your go right there. So this is coming in right now and testing a new hourly block of orders right there, right? So is this going to hold as resistance and this thing's going to continue lower? It's possible. But ultimately, you are inside of a longer term daily range. So you're just trading sideways. You are on the inside of this range, right almost in the middle of it. So it's best to just leave it alone at this point, right? So yeah, all right. Let's go look at ETH real quick. Get on the daily. So ETH came off pretty viciously too. It came off worse than Bitcoin did. I mean, I can throw out some speculation as to why. I mean, it was absolutely trading straight up when it came off, right? So basically a blow off top is when something just trades up and then immediately rejects. You got that, and you came off 60%. So if you don't want to call it a blow off top, you don't have to. This asset had no consolidation at the top like Bitcoin did. Bitcoin traded at the top for multiple days, multiple weeks before it fell off. I'll show you what I'm talking about right here. So you got all of this consolidation before the drop. So that invalidates what I said as it being a blow off top. But I was looking on the monthly. On the monthly, you have trading up and then an instant rejection on the monthly. So however you want to call these things, they're just price action, or they're just chart patterns. That's what they are. That's all they are. Sometimes they have weight, sometimes they don't. Chart patterns tend to work out about 30% of the time as a whole. But back to ETH. So you made all-time highs, nice, big, strong all-time highs, and then you just basically sold off. Boom, dropped 60%. You have taken out daily resistance to the upside on ETH. This is something that not many other assets have done. Once you put in this massive down candle here, you traded up the next day, put in a dead cat bounce, and then rolled over. And you can see ETH did take out that capitulation low. You see what I mean? You got that next push lower, took out your capitulation move, but then immediately bounced up and took out resistance on a daily closing basis. And if you look at this very next day, or this daily candle here, you can see how it absolutely treated that level as resistance. You traded up into it and then you rejected, right? This next day, you came down, tested your opening range, your daily opening range. This is your open on this day. Came down, tested the opening range, and then pushed higher. Pushed above, closed above resistance. Don't get too bullish on this yet. All right? Do not do it. This is going to be the same thing. You need to test and close above the 50 and the 618 areas. These retracement levels will be important levels because people will look to exit positions if they assume that Bitcoin and ETH is put in a top. These will be flawless places to put their exits in. So you may see some increased selling here, a small pullback. If we get nasty amount of selling where you get like a big bearish engulfing from this level after a few days of consolidating under it, and then boom, then there's a pretty good chance I might be looking to exit on a small pop. Some of, not all, some. I haven't even decided yet. I just want to see how price plays out at these levels, right? Because this will tell us if Bitcoin's going to put in a top or not, more than likely. So if you trade up to the 618 and you reject, and then you start making higher or lower highs and lower lows on a daily closing basis, yeah, it's going to not look good. So once you do get that, and you can see you do got a bullish candle right here as well, so you can get rid of the fibs and just put your line up there indicating the ETH level 332.83. That is the level that ETH needs to get a daily closure above to be better looking, essentially, to be repairing this damage that it put in. Now, the crypto market is growing. It's a lot different than it was back in 2017 when it put in its parabolic move to the upside and then blow off and then traded off 84%. You have a lot more bigger investors getting involved in this stuff. The platform as it's in a whole, Ethereum, has become a lot bigger. The gas fees back then and where they are now are completely different. Everything's different about these assets. So they can sell off this much and then repair themselves and head back higher. I am still bullish on them. I do expect this thing to go up higher. However, I'm going to let price tell me. I'm not going to assume anything. I'm not going to assume any models are still working or any models are broken. I'm simply going to watch price. Price is king. All right. So, but I do like this. This is fantastic. This means that it is looking for a higher test. Getting ready to test the 50, and then the 618's a little bit higher. So let's go ETH. Get yourself up there. Also on the FX markets. All right, so let's go look at the dollar real fast. DXY. Get this stuff going. So you are testing. This is your yearly opening range. So here's January, right? Came in, put in a brand new year, and immediately you turned around and started making higher highs and higher lows, traded up to 93,285, and then rolled over instantly and traded straight down. This is very strange price action indeed, as it is a lower high. So as long as you're at a lower high and not taking out any massive swings, then people will still look at that as a good spot to sell. It becomes more attractive to sellers the higher it gets, as long as it's not destroying the overall structure of the market. And you didn't, right? This is your swing highs that you needed to get above. You did not. You came back down instantly, and you're back down testing the yearly opening range. This is your yearly opening range. So you may have put in a high on a yearly candle, and now you are going back down to finish putting in the rest of the yearly trend, which could be to the downside. All right, the way these candles work on most time frames, almost all the time, is they will put in a high or a low and then trade away. Or if you're going to trend, go down, put in a low, and then work its way back up. It's just the way it works. Weekly candles usually have put in their high or low by Tuesday, at the very latest Wednesday. Not always, but a lot of times. So this is a yearly candle is no different. A quarterly, none of it's different. It's all fractal. It means it all works the same way, just on different levels of time. How long does it take to play out? We will see. If I'm right, if this is just an opening yearly range, push up, and now we're heading lower, you can see some messing around in this area and then a steep drop. A measured move on that would put us down to about 86,900 if it plays out. All right, I don't know that it will. There is people buying this. They do see this as support. It is support. This is a quarterly chart. You can see it is support. All right, there is your quarterly close. You are in it, testing it. There's 34 days left on this candle, so you got another month. Here's your monthly. You got support all the way down here, so you've just barely tested monthly support on the yearly opening range, or on the yearly open. You have not been back down to test it yet. This looks disgusting, right? This looks bearish to me. I am looking for this level to break out or break down. I just don't know when it will. On the daily, you have new support. So let's get rid of this. Excuse me. So you can see, no, you don't have new support. Your support is still right there. That's the last and lowest place the dollar could close on a daily basis. That is the support level. It has been front ran. You are trading sideways. So we will see what happens. If this thing breaks down, you're going to see a pretty big move to the downside. I am currently long on pound dollar because of it. Euro USD also trading around those important levels, guys. I mean, this is what you need to look for if you're looking for position on these assets. This down move is what you want to see. I don't like the fact that this was reversed hard, right? But these are the two levels that I'm watching on this asset. One spot 21483 and one spot 20726. I will look for bullish entries around both of those levels. All right. If I get stopped out at this one, I will simply wait on a test of this one. That's how this works. We don't know what's going to happen. We have to take positions at areas where you have a higher probable chance of being on the right side of the market. It's obvious that we did hit this target. This was our target last week. You have hit that. You actually took it out on this day, right? So that day the target was gone. It's over with. So now we have to see what happens. This looks like they sold into those stops up there, right? Because you got this pullback. Today you are still trading at an inside day. I want to see this thing come down and test that 121 spot. However, you may and can hold support where it tested already. So this was your last bearish close on this ascending price, right? This price leg to the upside. That's your last and lowest bearish close. You can see how you've tested that flawlessly today, right? Boom, there's your test. See what happens from here. It looks like it's trading as an inside. You have taken out yesterday's low. So if I was a gambling man, I would say this thing is probably going to carry a little bit of continuation to the downside today. So if you're looking for entries on the euro, well, I wouldn't take a short on it now. However, up here would have been a whole different ballgame. Down here, not so much, because you're trading too close to the low of day. That's a 40 pip move. But from here, it's less, 16. That's not attractive to me. Anything over 30 is attractive for an intraday trade. This is not. I did get short on Aussie yen. I put in a position yesterday on. Alright, this is the paper account. Good. I almost got a little bit afraid there. I have a bad habit of forgetting to turn off my positions. I don't care to take positions on a paper trading account, but not really going to do it with live funds, as that is a whole different ball game. So I put in this yesterday, this area. Let's go look at it. These two areas are dailies. They're two levels of daily support and resistance. Also, we'll get to that. Let me just show you this position. So basically, here's this support right here from this bearish candle. This is your bearish candle close. And then I took this other line from this bullish candle open. So you can see there's a slight gap as far as any closures are concerned in that. So last night when I was looking at price, I put out in the Discord that I was looking for price to trade back up into this area. These two white lines are those two dailies, right? And I put a red box in there just to show how important it was. I threw this limit order out at right before I went to bed last night. All right, threw the limit order out to get short, put my stop above this 15-minute swing high here. So yeah, it didn't really make a swing high, but this is a swing high because price stalled out, put in two bullish candles, and then reversed and went back lower. So this is a swing. So technically, I guess I could have put it over that wick, but it didn't really matter. At this point, I don't care. I took this trade on both of the other accounts as well, both the main accounts. So I'm in this thing on all accounts, right? I'm still long on the pound dollar on my main account. I'm in this short on the main account and now short on the smaller account. So we'll see what happens. It's been trading sideways Let me pull the daily back up. It's been trading sideways. So here we go. There's a 3-day. If you remember the pattern that everybody's talking about, the Wyckoff distribution pattern, well, I call it a 3-drive topping formation. You have that on this asset. If you top that in with your RSI, you can see here you put in a high at overbought. This is a 3-day chart, 3-day RSI, overbought. Second high here, there is your bearish divergence. From this point to this point is bearish divergence, and then this consolidation made another small insignificant high, and then you rolled back over into the range. So there is another, even though it was higher, you still put in a lower high on this. So this is bearish divergence. All right, absolutely. When people are looking for bearish divergence, that's what they're looking for. All right, I just figured I would mark it out as all the technical indicators are showing that this thing wants to head lower. If we put on our moving averages, you can see here's your 21. This moving average, the 21, is so important on the daily, as it can pretty much sometimes call turns and trends. All right, you can see how you were testing it, traded beneath it. So far you have been trying to test above it and trade above it on a daily closing basis. You have been unable to do so. I did not take this position based on the moving averages. I took the position based on my style of trading, the way that I'm trying to teach you guys how to trade. You can see there that that short is essentially as beautiful as it can get. That dotted red line is my entry. So let's get rid of all drawings. Boom. There you go. Look at that. And I put this out last night before I went to bed. All right. So this isn't hindsight. When I'm calling out stuff, ever, it is never hindsight, because I am a trader. I trade this stuff. So there you go. There's a short position. Now, will this work out? I do not know. Obviously, I do not know. I have no clue. Not a profit. But if you take this up here, oh, I did that wrong. Sorry. Let me move this down. See where we need to get to become a 2-to-1 risk to reward. Aiming at the low of day is a 3.6 risk to reward. 3.6 to 1 if it plays out. My target at this point is simply low of day. Once we get down there, if we get down there, I will set a take profit level. In fact, let's do that right now. That way anybody that's new and not familiar with this system can see how I do this. So I have 3.5 lots on this or on this. This is a sell order. Instead of clicking up the order pane window and clicking take profit, I do not do that, because that will exit the full position. I take 2/3 of my position size off and leave 1/3 on, and then I move my stop to break even once my profit target is hit. So the way I will do this is I will put in a limit buy ahead of low of day. So let's get rid of this so I can see what I'm doing, because this is important. So we took out 5-minute support over here. We did. All right, so this is your last 5-minute closing candle. You can see how you tested it beautifully and rolled up. This can continue higher, guys. So don't be jumping in here short. The trade was up here, not down here. Down here is not the trade. This was the trade. So even if I'm wrong and I get stopped out, this was the high probable entry, not this down here, up here. So I'm just saying, but all right, back. I got sidetracked, apologies. So I find my support level, and then I find the next bearish candle. Where did it do? Right here. So my target profit would go above this candle, this 5-minute candle, because if this is a bullish order block, which it was tested here perfectly before it traded up, then if price comes back into it again, it may act as one again. So that price is 84,391. So I'll put a limit buy at 84,391 right there. Obviously change this. If I'm looking to take 2/3 of the position size off, I will simply put, I don't know, let's just call it 23. 23. That would be about close enough, right? I'm eyeballing it anyways. So it'd be 2.3 million units. That's 1,000. So there you go, right? There it is. So if price trades down to there, boom, it will immediately take off 2/3 of this position size. I will then take my stop and move it down to better than break even like that. And then I will let the position run. Because if this thing is going to roll over, if this is a 3 drives topping formation, right? If it's going to continue, you're going to get a big move out of this. A big one, right? Especially if you start taking out supports, you're going to get a nice range expansion move to the downside. It can still maintain bullishness. It can come all the way down to 80.65 and still be considered bullish because it's just been going straight up. This is a rising wedge. It is also atypically played out to the bearish side. All right, so let's go here. Throw something on it like that. Like this. Nope, not that one. So I would use that one. Sorry, guys. There you go. It's a rising wedge. So these patterns typically play out to the bear side as well. So if you want to be on the safe side, then just wait till you get a break down out of there. You get a break down out of there, then look for a retest area to look to get short. All right. Now let me go see what we got going on over here in the comment section. Good morning, everybody. Great quality today. Yep, crisp image. Got some pretty good. The internet speed was pretty good this morning. What's up? Does anyone sleep anymore? I do. I'm still sleepy. I want to go back to bed. I did not want to get up when that alarm clock went off. There's a reason why I do it this early. Mainly because of the internet connection, but it is what it is. Nice. Captain Benny says, yep, can hear you, legend. White coffee accumulation, head and shoulders, so many different views and patterns. Time for heat to bring the clarity. Yeah, I agree. Good morning, first time live with you. Well, welcome, Edward. Los Angeles is in the house. What's happening, Andre? Bunch of good mornings. Yeah, okay, I just did Aussie Yen. I'm looking for shorts, and I am physically short. Just looking for that daily range to play out though today. Trend lines are more you're on log chart, I think. Yeah, I know, but I mean, sometimes I don't use the log chart. You know what I mean? And they still move. It's not just the trend lines. It seems like they move my my horizontal support and resistance levels too. I don't think they're like doing it despite me. You know what I mean? I think it's just something's wrong when I shut it down or whatever, bring it back on. It's usually, and it's not way off. It might be instead of at the closing price, they might have just moved it down to the low or something like that. Good explanation. Looks like resistance, to be honest. Good morning. Sorry, quick question. How come in the Bitcoin analysis you said that if it shot back up, it would be bearish signal? Because so this was a massive, hard, strong move to the downside. What people need to learn about price action is where it goes sometimes isn't as important as how wide is the range and how fast was that range put in. That is more important in a lot of cases because it shows you the sentiment of the market. So basically this methodical push up the ranges were not bad. They weren't huge, but they weren't, massive, and they were slowly going up. Like you were trading a little bit sideways almost, right? So when you have a rapid expansion in price like this shows that it's a massive amount of selling. So it's panic selling, it's investors taking profits, it's other investors getting short. It means a lot of things, and it expands rapidly. So basically a rapid expansion back to the upside would be a dead cat bounce. That's basically what it would be looked at as. And people would look to sell it, exit it, whatever. However they're in it. If they're not in it, they want to get in it. That's how they get in it. They look for that massive move to the upside, because it's basically what some people call it. It's a dead cat bounce is all it is, but some people call it a bull trap or whatnot. It brings back in FOMO as well. People are like, oh, this is the low, I'm buying, and then boom, it comes right back down for that second leg to the downside, right? So a slow, nice, easy move, a test of resistance a couple days, and then a failure, and then a test of support, and then a hold, and then it gets above that resistance, and then it plays that out again, a little bit of sideways, support, up, blah, 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 etc., etc. That is more indicative of people actually getting back in the market. Like the buys are becoming, people are becoming more incentivized to look to enter the position as all of this volatility has slowed way down. Some people don't like to trade or buy or enter volatile markets. So there's a few reasons why that sentiment is, you don't want to see a fast spike up, right? Because that indicates that the volatility is still wide and rampant in that asset. As where a nice slow methodical move back to the upside could be indicative of volatility leaving the asset and buyers coming back into the asset, right? Hope that helps. If price closes inside an order block rather than a wick in and out, can we consider it violated and ignore it, or does it have to clear it completely? That's a good question. It just depends on what price is doing. All right, let me go back. Or here, where is a good test? So there's a good test of one. I don't like to use dojis as these areas for resistance and support. However, they do work. So this would have been one, right? The opening price of that bullish candle. That's your order block. So you're saying if you get a close inside the order block, then you just go to the closing price of your bullish candle, right? Because then that area may act as resistance. That's actually the real resistance. All right, so this is going to confuse some new people, but that's okay. So the closing price of the bullish candle is the resistance. The opening price of the bullish candle is the order block. Does that it is the Heath level. It's the supply, or in this case, yeah, it's the supply zone, right? So when price trades back up in it, it touches just the opening price and rolls over. That would be saying, yep, that's the supply zone. There's a lot of overhead supply sitting right there at that level, aka selling orders. Now, if you close in the middle of the opening and the closing of the bullish candle, then you have to wait and see what happens when the next day. Do you get a closure above the resistance? Right? I hope that clears it up a little bit. A little bit anyways. Hope you have a nice day too, Prophet. Thank you very much, my friend. IE on ETH one day, once it closed the daily inside the last bullish candle. All right, ETH daily. Let's go to ETH daily. All right, since once it closed the daily inside the last bullish candle, so this right here. Could we have expected it to go higher because bulls are closing? You don't want to expect anything. Expectations in the markets are a bad thing. Yes, I see what you're saying. Yeah, instead of rejecting at the opening price, like this one did, right? You traded up into it and rejected and then closed bearish. So people went into a smaller time frame and found another bearish place to get in, another supply zone, another Heath level to get in, and then boom, you get continuation. So whereas this one was a strong bullish close, you closed completely above that, the next area would have been the resistance. So what you can essentially assuming and expecting in the markets is two bad things to do, but what you can look for is what happens when you test the resistance. So in this case, you tested your resistance level and closed just beneath it, right? So the momentum is clearly to the bullish side. You even came down and tested support on a smaller time frame, found it, traded back up. So this candle was red when it put this wick in, because this is your opening price, right? That's where you opened. So if you're trading below the open, you're red. If you're trading above the open, you're green. So you were red on the day. You traded all the way down, tested the midpoint of this bullish candle, and then traded back up, put in a green day, tested resistance, and closed right beneath it. It is saying, yes, the bulls have momentum. But this is the problem on a position like this. You did take out that low. So is this bullish momentum, or is this short traders and position traders exiting their positions rapidly? That's why a dead cat bounce will be looked to be sold back into, because on this push lower, if they didn't get out, right? You got another lower push, then they get this lower test. Now they're selling, or they're exiting their positions. This candle was the pain candle, maximum pain. People were like, once this was put in, capitulation happened. Oh, we're trading sideways. People were expecting it to just roll up higher, put in more bearish days, and then that, if you're already losing a lot of money here, right? You don't want to see this, because then your heart gets broke. Then you get crushed. Your soul is just like, oh, I should have exited up here. So then you'll go ahead and exit. Boom. And you can tell that's what happened, because look at this explosion of buying. This isn't people getting long. This is people exiting more than it is people getting long. Investor sentiment in Bitcoin and the cryptocurrencies right now is terrible. It's absolutely terrible. So this is a dead cat bounce. Everybody was just destroyed. We took out this low. So I got to get out. I got to. We're just going to keep going lower. And then that's what happened. And then you got that massive explosion of buy orders coming into the market. So this is going to trade sideways in this area. You need to close above here to indicate repair, actual buys, not just sell orders that are sitting out there, right? Because once these coins get exited, now that just makes the supply come back into the market. So it's just one of those things, man. It's hard to explain, kind of. I hope that helps. Once you've been trading for a long time, you'll start to see this stuff and you'll start to understand it. It just takes time, guys. I keep saying it over and over again, but it's the truth. You're not going to get this in a week or a month, maybe not even in a year. It takes a lot of time and patience and study. And also one other thing, DJH, everything works in trading, just not all the time. So just because you think something can happen and it does happen, doesn't mean it will happen the next time. All right? That's why you need to use stops. Can you also make an analysis on XRP graph, Reno? I can, my friend. I like the word chart better, but I'm not gonna nitpick you. Well, I kind of just did nitpick you, didn't I? Yeah, let me go find it. XRP, where are you at? There you are. Oh, I can't use it on that one because they still ain't no trading on it on Coinbase. I'm staying away from XRP because of that fact, right? Can't trade it on Coinbase. I don't like it, but I will absolutely find you some levels. So here's your old all-time, or not old all-time high, but a close, which is resistance, right? Broke out above resistance. You've tested that resistance, and so far it's holding. So it looks like it's coming in to test that. It already has tested it. I wouldn't be looking to get short here because of the same thing that's going on Ethereum. So those sell order, when people sold their positions, it takes a couple days for that price action to work out, right? People assume that when you sell, then the price action happens instantly. It takes days for it to basically, you know what I'm saying? So all of this selling, if there's not enough buyers to pick it all up again, eventually it will roll back over. But if there are enough buyers to pick it back up again, you will start seeing higher prices. So I wouldn't be shorting up here, right? If I was looking for a short on it, I'd be looking probably up here or your resistance here. But it's your call. If you're talking about buying it again, take a fib level and take it from your high Well, I wouldn't use this high because you had a leg down, consolidation. I guess it's the same thing as Bitcoin. It just looks different. So from that high to this low, anything above the 618 is bullish. Anything into it is still in bear market territory. I'm not saying it is the bear market. I'm saying if price is still trading under the 618, you are in bear market territory still. So you got to go up a lot just to repair it. So give it time. This isn't going to play out in the next day or two. It's going to take time to get back up there. If it does even, right? It can find resistance here. So I don't know what you're, but that's the level. Let's get rid of these two levels at the very least. So put this one back on the chart. You're going to be watching that, and you're going to be watching this, and then you're going to be watching this. If you are bullish, you do not want to see a daily closure below that bearish candle. All right, you get a daily closure below 97,507, you're going lower. That's your support. But that's also an area to buy. So I mean, you're in one of those areas, man. You're in one of those areas. When I'm trading cryptos, I'm only looking for intraday range expansions. I'm not looking. Well, the Bitcoin position I bought a little more. That's a hodl position, but everything else is just a day trade. Not really looking to buy back into these assets. Riot, yeah, PAK land. Alright, so hey, he's from Packland, PK. Please, PGSUS. I don't know if that's a ticker or not. I don't know. Pegasus. I don't know if this is what you're talking about. You're trading at highs. Yeah, this is the lifetime of your chart. So this is a yearly chart. You're trading at highs. You're trading at yearly resistance. I wouldn't be looking for any new bullish entries. This, I mean, technically, I guess you can. You want to look to buy pullbacks, guys. You don't want to look to buy green candles. You want to buy red candles. It's exactly opposite that you've been taught. This is where you would have looked to been a buyer. But I mean, it looks good. You got yearly resistance, but yearly resistance doesn't really matter. I just looked to where it was to see how long this asset's been trading. You have daily levels right here. So this was support, broke beneath it. This is your test. It failed. All right. So you're coming back into a retest. 84.80 is an important level. You need a price or a daily close above it. This is your resistance right there. So yeah, a daily close above 84.80. You can look for a retest of that level for possible higher low support. That's where you would be looking to enter it. If you're looking to short it, yeah, watch 84.80. That's about all I can say. And I just did look at ETH. Good, tremendous stuff. Thank you, Tim. Good morning, Heath. NETA on NAS 100, please. Yeah, let me go look at it. So you got that bounce. Is this our... Yep. All right. So this is our yearly opening range. This line, this white line, it's not, or this gray line, it's not a resistance level or anything. I just put it in there basically seeing how far we are up on the year. So right now you are up on the year 5%. So this thing can go either direction. You know what I mean? It's trading midway to the range. The range being the yearly opening range. So this is your high, and this is your yearly open. Just got stopped out. So what happened? Let's go look. I'll come back to that. Let's see what just happened. See? That's why you gotta trade with a stop. That fast. Wait a minute. What's going on? What just happened? This was my entry. Oh, I moved my stop below and I forgot. What an idiot. That's alright though. This is the paper account. My other account is still good. So I moved my stop down below break even because I was showing you guys how to do that and I never moved it back up. Alright. Alright, back to that. Sorry. It's too early in the morning for this, guys. US 100. Where are we at? That's what you said, right? Where was it? That's not it, though. Because I was just looking at it on an O and the chart. Where'd you go? NAS 100. So it's NAS 100, not US 100. Sorry. Alright, here we go. Back to the daily. So what I was looking for on all the assets was like down to sideways because of May. It's May and the old adage, go sell in May and go away. Plus most of them hit their yearly profit targets. Like the S&P 500 hit the 12% profit on the year. Nasdaq was around 10. So once you hit that, then people just exit their positions because in summertime you got your summer doldrums, right? You got sideways trading a lot of the time in the summer. We will see if this summer acts the same way. You're testing resistance, right? Here's your resistance. You tested it. Boom, boom. You have, this is an outside day reversal. Not quite. So you didn't take out that high, but you have taken out the low and you are trading beneath the low currently. So if you're bullish, you want to watch this area, see if you get a test and hold a support. As long as you do hold support there, then you can aim back to up here, but only up to there. Right? That would be your first profit target area. You got old support here that was broke down, tested, sold off. See how that works? Here's your breakdown. Here's your retest of it. You did get a wick way above it, but you closure is what counts. Closed below it, next day, boom. So they sold that wick. They were selling all the way up. So basically, this is the resistance now, right? You need a daily closure above that to be a break. And then your next area would be here. There's obviously going to be some areas on the smaller time frame chart in the middle, but those are your three levels you're watching for the rest of this week and the next week. Those levels are 13,966 all the way up here, 13,727 and 13,494. I gotta start wrapping it up, guys. Ahmad Rewind, ETHUSD was mentioned. Yeah, I did. What about Dogecoin? I went over Dogecoin at the beginning, Heifer, or however. I don't know how to say that. I apologize if I butchered your name. Check out AKRO. Yeah, alright. AKRO USD T. That's not a T. This is a T. KuCoin. Ooh. It got brutalized. 84% off the high. Oh my gosh, man. This thing got smashed. 84%. So I guess if you like the platform or whatever it is, I don't know if it's a platform or what it is. If you like it, you've done your due diligence, your research. 84% off the highs. That's 84% off that price, period. So, I mean, yeah, pick a few up. I mean, why not? 84% off the highs. That got destroyed. I don't have to tell you that the bears are in control. You can clearly see that. I mean, this thing was a flawless sell. Boom. Took out that wasn't even a capitulation. It just went down and then closed a little bit above. There's your midpoint test. There's your new low. So you're testing resistance again. Right there. 271280. You get a daily closure above that. Next area of support or resistance will be 364194. This low here. because it only got tested, and there's your break. So it will be tested again eventually, right? It will be tested before this. So that's what you're looking for. If you take out this bearish candle's closing price, you're heading lower, because that's your support right there. That's your support, 22.1034. All right. Riot, what used to be a penny stock. Man, I remember this thing was trading at like $1.50. It's crazy. Man, it didn't come off as bad as I thought it would have. Boom. So, yeah, I mean, it's the same thing. Are you looking for entries? I wouldn't be. You're even, let's see, you're trading lower, or right at the close yesterday. So you're trading right at yesterday's close, which is alright, but this is a steep decline. You hit oversold on the RSI, that's why you're getting a small bounce. I would look for this bounce to be sold into. Riot, yes, I know it follows Bitcoin and stuff, but it's also, they must have changed. Something must have changed for this thing to follow Bitcoin so closely. Well, the buyers is what changed. People were just buying it up. However, it's got a low float, so be careful. They can crush it right back down to nothing. So here is your last bearish candle's close for your swing low before you broke back down beneath it. Obviously, this bullish daily right here is going to act as resistance. And then your next area of resistance is going to be 36.49. If you want fib levels, just take a fib retracement from your all-time high down here to the low. So you're still in bear market territory all the way up to 43.15, 50.09, and 57.03. You're still in bear market territory all the way down there. And, well, I can't say that. Did we come off 20% on this? Yes, 73%. So yeah, I would look for continuation selling to come in on this. I mean, but it's going to track Bitcoin. If Bitcoin gets picked back up, this probably will too. This probably will too. But the investor sentiment out there is mighty negative, so just be careful, guys. Be careful. Heath, will your 3-day... Oh, where was that? Heath, will the 3-day weekend affect your trading? I just probably won't trade on Monday. I don't know. The Forex market, crypto markets are still open. So, I mean, they probably won't be doing a lot. Memorial Day is a pretty big holiday in the United States. Price and price alone, absolutely. Bitcoin had a V-shaped recovery in March of last year, but it was not a dead cat bounce. So, I don't understand why you said V-shaped recovery could be likely a dead cat bounce. I'm not saying it can be anything. I watch price. I was just explaining how a dead cat bounce works. A dead cat bounce is when you have a tremendous amount of selling and then a bullish push. That's a dead cat bounce. That's what it is. That's what it's called. You can't call this a V-shaped recovery until you take out this high. So I mean, if you want to start calling it a V-shaped recovery, you can, I guess. I don't see no problem with it. However, you will not know if it's a V-shaped recovery or not until you get all the way up here. If you want to take your chances and buy down here, like I did, then that's fine too. But just know you're taking a big chance. I know Jordan has a lot more faith in the model staying put, this thing continuing to go higher, but you freaking went up like 1,000x almost on this thing. We were trading at 3K not too long ago on Bitcoin. You're trading at 36K now, right? This is last year. Last year, right where we are today, May 27th. The high was $96.29, so $9,000 a year ago. You traded all the way up to 60K. That's a massive rip to the upside. This was a massive rip to the downside. I mean, it fell off. Look at the price action, and it's just boom. That's never a good sign. That's not just simply a pullback. 50% off is not just a pullback. Ever. Ever, ever, ever. Now, it can recover, absolutely, and I'm hoping it does because I am still long, but you got to call it what it is. It's a dead cat bounce until it takes out this bearish territory. Because people are going to be looking to sell up there, right? A lot of selling is going to come in around this area. You get a closure above 51K, you're out of bear market territory. You are back into where you want to be, happy land territory. But you're still way away from that, which is good. I would much rather see a slower push higher than a fast one. Heath, yesterday Aussie yen closed daily above the level 84. Today we tested this level and I went long on a higher high. You did nothing wrong. I get this question asked all the time. Just because I'm on short on something doesn't mean that I'm right. Right? I know what you're saying. You did. So here's daily resistance. Right? 8 hour. So you took out resistance. Right? You waited for a pullback. You got long. Fantastic trading, my friend. That's how it's done. That's how it's done. I'm not saying that my short's going to work. In fact, I'm not saying that at all. You know what I mean? Near term, you got to bounce. You did right. You took out your resistance on an 8-hour closing basis. Boom. So you're looking for a retest to get long. Nothing wrong with that. Trades don't always work out. You are bullish. Overall structure is still bullish, right? You're still in an uptrend. You did nothing wrong. Hopefully yours works out. You know what I mean? I don't mind to lose trades. I lose them all the time. It's part of the business. But yeah, it can go up. It looks like it's trying to. It looks like it's already. Let's see if it's taking out that New York. This is the London Open. So it looks like it's trying to take out the London Open right now. So this could be the low of day. We'll see. We shall see. Well, not the low of day. The low of day was put in over here, but you got what I'm saying. Yeah. It could go higher, my friend. It could. Could you have a quick look at ETH BTC? Actually, I got to shut it down. I will go look at it real quick. I got to get ready so I can manage this position. And a couple other ones. ETH BTC. Oh, let me just type it in because it's easier. BTC. Let's get off the 5-minute. ETH BTC, nice. I don't know what this trend line is. I don't know what any of these lines are. So this is beautiful. ETH BTC looking fantastic. ETH BTC came off 32%. That ain't nothing bad, right? You're already back in it. So now you're only 14% off the highs. And you took out resistance. There is going to be some resistance here. So if you want to look for entries, you look for a test of that old area right there. Boom. So if it comes back in there and holds a support, you can watch it on a smaller time frame, like an hourly or something. May be a good spot to look for bullish entries. This asset is still completely bullish. 30% drop on ETH and BTC ain't nothing. All right, 30% ain't nothing. It's par for the course. Looks good. Looks like it's trying to recover. This is your main resistance level. You need a daily closure above that. 75391. So be neutral to bullish on this asset. Neutral to bullish. Alright guys. Yeah, I'm a lot later than I absolutely wanted to be, but that's okay. So I gotta pull this up. Just guys, make sure you trade safe, alright? Don't be betting the farm on these plays. You know how to do it. It's the right way. There's a right way to do these things and a wrong way. I gotta say thank you so much to my Patreons and channel members. Just make sure you're protecting your downside risk, always. That is the name to this game. That's how you become a successful trader. Is when you know where your risk is, then you start to get more experience to finding those areas where you have a higher percent chance of the trade working out in your direction. Like what's his name? What they were just talking about. I can't remember who said it, but I'm short Aussie yen right here, Danny, and he's long. That's why these markets work. I'm short, he's long. Who will be right? By the looks of it, looks like he will be. You know what I'm saying? So just that's a high probable setup. His setup was a high probable setup, more so than mine, right? So it just takes time and experience. You can't rush success, guys. But with that, I have to say apologies if I didn't get to your question. Just drop it down in the comment section, and I will try to answer it there. Thank you so much for being here, guys. Happy trading.